Alright, went and opened up the safety deposit box today, took some stuff out for a little while just to make this video for you guys especially, because I think it's important at the times we're heading into and what's going on. And I know there's a flood of information out there. This is kind of like me spitting in the ocean thinking that I'm adding to its volume. So don't want to take up a bunch of your time. I'm not going to convince anybody today to invest in metals, most likely. I could sit here and splash charts in front of you and talk about history, and we could discuss the debate which borders on religious zealotry between Keynesian economics or Misesian Austrian economics, the Chicago school, etc. We could go into all the details of whether debt equals wealth or savings equals wealth and how economies are expanded and what happens with money supply. But we're going to ignore all that today. And we're just going to take a moment to talk about my personal opinion here of what gold is and its role. Now, we all know that gold is valuable. We can't ignore that fact. Central banks are buying it. They buy it now. They've become net buyers over the last several years. And that gold today is trading at approximately $1,600 an ounce. And a year or two ago, it was as high as $1,800 an ounce. Back in 1999, after Brown's down, when Gordon Brown of England decided to sell off a major portion of England's gold, it drove the price down to around $256, $260 for a low, and hovered around $300 an ounce during that 1 to 2 year period, which would have been a good time to buy. We also know that gold spiked during the panic and recession era with interest rates and during 1980-81. Now, gold was not legal to own in bullion form in the United States until around, I believe, 1974. 1971 is when Nixon closed the gold window and did the final unpegging of gold in the U.S. dollar, shattering the Bretton Woods Agreement. But in 1974, gold became legal to own again for United States citizens. For those of you who don't know, it was illegal from 1933 to 1974, other than collectible coins only. And there was a 10-year prison sentence and up to $10,000 fine for those caught, I guess you'd say, investing or buying bullion coin and holding gold bullion. Once that lifted in 74, investors started finding ways of putting money into it. And one of the reasons for that is gold is, as we know, rare. Here's a nice 1981 ounce gold Krugerrand, a little stack of them there. And it takes a lot of labor and effort to get it out of the ground. Some estimates I've heard are anywhere from $750 to $1,000 an ounce, depending on the mine, is spent to extract that 1 ounce of gold. And then the tonnage of material varies from here and there. It's used in industrial applications, electronics. Look at the flood of electronic devices today. Jewelry, dentures, India. There's a lot of gold flooding into India during the wedding season because of the cultural significance of gold there. There's also gold going to Russia and China as well, becoming big net buyers. And as those of us who do believe gold is a valuable asset to invest in and diversify into, we're also familiar with that the Federal Reserve and the holds a significant portion of gold. So if it didn't have any value, I doubt that the United States Federal Reserve would hold it out of sheer tradition. So it must have some form of value for them to be holding it, as well as silver, which you can see here, United States Silver Eagle. Probably the best option for investing in silver would be the U.S. Silver Eagle, just because of its recognition and there's just a lot about high demand in the U.S. anyway. These are the way to go for silver. I have purchased in the past Maple Leafs, which you see here, Canadian Maple Leaf, good 1 ounce silver coins. And then there is the Austrian Philharmonic, struck in Austria again. It's I think it says, yeah, about $1.50, but they're 1 ounce of silver. Okay. You can purchase gold in different weights and denominations. There's the 1 ounces you see here. These are graded U.S. Eagles. Okay. It's a 1 ounce gold eagle. graded MS69. You don't have to buy them graded. I just happened to find these at a good deal. You can get up to 10th ounce coin, or as low as 10th ounce coins, so that's 1/10 of an ounce. Now, 10th ounce coin, it's pretty easy to figure out how much that's worth in gold value. Let's say today gold's at $1,600 an ounce. The 10th being 1/10 of that would be $160 in gold value. Now, there is a signatory charge or a coinage charge fee. A lot of people wonder, hey, why is there a spot price and then the price that I pay? Well, spot price is typically reserved for if you're buying a 400 ounce bar, or whatever, it's a 420 ounce, something like that. I've never seen one, held one, so I have no idea, because there's just not that much money in my life. But I guess they're called London Good Delivery or London Trade bars. They're, what about 400 ounces of gold, and it's not been struck or fully refined, and so they're where you pay the spot price. Now, once gold's broken down, refined, purified, measured to an exact weight and specific weight and purity, that takes work, and then it has to be struck and minted, made into blankets, blanks, and then struck and then distributed. So along that pathway, there's costs accrued that have to be compensated for, both from mintage, distribution, the coinage, the dealers, distributors, whatever you want to call them. So the spot price is pretty much what the bars were getting, and then those bars were sent off and then purified and struck and made into blankets and coins, and that's where those charges added up, which made it above spot. Not to mention demand for the particular coin or product. So at one time, I remember Krugerrands were about $17 to $20 over spot, just because they were more common, a little bit less demand. And if you wanted to get I'll just use a graded one here, a non-graded US Gold Eagle, you were going to pay anywhere from $50 to $60 over spot, compared to the 20 or so for the Krugerrand, just because of higher demand and availability, what have you. So that's something to consider. You don't want to pay an exorbitant price for gold when you buy it. I've heard rumors of 1% being an appropriate 1% for the coin. So if the coin's gold value is $100, paying $10 for that. So $10 per 100. So basically $160, I guess, over spot for an Eagle or a Krug today. And to me, that's a little high. Currently, I would expect, if I went to purchase one, to pay around $80 to $100 over spot right now, for any of these, the gold products that you see right here, right now. And that would be for a full ounce. I wouldn't pay, for a 10th, 160, so let's say 30 to 40, because sometimes the spot prices go up for the little guys just because of demand on them. More people are buying smaller amounts of gold because not as many people are running around able to buy full ounces. So you might see a $40 charge on top of for a 10th. The U.S. gold products, they're also struck with a monetary value on the back, $50. These are legal tender. A lot of people don't know that. It is a U.S. coin, just like a U.S. quarter is. So if you owed somebody $50 in labor for putting in a patio, framing a wall for you, doing some construction on your property, whatever, it is legal to pay them in that coin as $50 of payment. Now, there's some shady areas where it's illegal to, let's say you paid them the $50, but it was really $1,000 or $1,600 worth of labor. There's some gray areas there as far as taxes go. Now, it was fought in Supreme Court down in Las Vegas because a gentleman was paying his employees with U.S. gold and silver eagles, and the IRS took him to court. IRS lost, but there is some things, people have taken them as far as payment is concerned. It is a currency. It is part of the U.S. mintage of coinage. So anyways, that's an introduction to some of the gold and silver products. Invest. I got to get these back and go put them back in the box today. But they're probably going to think I'm crazy taking these out and then going back and putting them back in the same day. But I thought it'd be fun to do a little video on it and discuss, gold and silver products. So as far as investment goes, I'm very happy with it. There's nothing like the safety. I'm just going to add this at the tail end of having your savings, or a portion of your savings, in metals. I've I've been in stocks, I've been in bonds, I've been in mutual funds, and I went through 2007 just like the rest of you did. And as a matter of fact, I do have a receipt here from that era, just so you know I'm not lying. December of 2007, where's it at? You're going to want to see this receipt. Okay. So, December 21st, and then I got some in November. Okay. I'm going to fold that up so you can't see it, but that's the December 21st. That's one of the purchases there, back when I liquidated some mutual funds. And got some money from family. It's just money came in, and I was fortunate enough to be able to take some savings out of my bank, and during the big economic panic of 2007, and just move some things around. The same with some college money for some of my kids that I wasn't going to let get sucked away into the vacuum known as Wall Street. So anyways, thanks for viewing. I encourage all of you to explore the opportunity to invest in gold and silver. All right. Have a good day.